According to a CNBC article that was published a few weeks ago, the tipping point for most buyers is 5.5%, meaning that most buyers will buy a house if the mortgage rate is 5.5% or lower. Now, we all know that during the pandemic, mortgage rates were historically low, which caused a buying frenzy. Now, the question is, will rates ever get that low again, or will rates even get to that tipping point of 5.5%? Now, if you're on the fence of buying, keep it locked, because in today's episode of The Desert Life, we are going to talk about the good, the bad, and the ugly of lower interest rates from a buying perspective, and how these three stages can affect your buying power. Before we dive into the good, the bad, and the ugly of mortgage rates, please subscribe, give this video a thumbs up, and share this video and this channel with your family and friends. So let's jump into it. The market is very volatile these days, especially with so much uncertainty from decisions by the Feds to a looming recession. Mortgage rates are a roller coaster ride. It seems like rates are changing on a daily basis. Mortgage rates on a 30-year mortgage were 6.39% for the week ending in April 20th. The week prior, rates were at 6.96%, and who knows where they'll be by the time you watch this video. But historically speaking, the average mortgage rate on a 30-year mortgage is 7.75%. Today's rate is definitely lower than that, but some of us still consider today's rate high. Now, another historical fact is mortgage rates tend to fall during a recession, which is possible to happen in the near future, and this really helps stimulate the economy. Now, my personal thought is we're already in a recession, but besides that, if we indeed go into an official recession, the odds are favorable for lower rates. So, what is the good of a 5.5% or lower mortgage rate? The obvious is homes are more affordable. Well, actually, let me just rephrase that. The monthly mortgage payment is more affordable. It could be a difference of a couple $100s. That means you'll have more money to budget and save for emergencies. You'll finally have buying power to get the home that you've been looking for a long time for some of you. Now, onto the bad of a lower interest rate. Now, you know how you've been waiting for interest rates to drop so you can buy a house? Well, so is everyone else. Like I said earlier, lower interest rates stimulates the economy. So that means demand for housing will increase when interest rates drop. Now, don't get me wrong, stimulating the economy is definitely not a bad thing, and neither is lower interest rates. Now, I'm all for lower interest rates, and who really wouldn't want a lower interest rate? The bad is when you, along with everyone else who's waiting for lower rates, enter the market, and now you're competing with one another to buy the exact house that you want. And how do you think that's going to affect home prices? Yep, they're going to go up. It's basic economics. More demand pushes prices higher. Now, it really becomes twofold. You're going up against more competition, and you're more than likely pay more for the house, which leads me to the ugly of interest rates, not getting the house you truly want and settling for less because you were outbid. Look, we've already seen, truthfully speaking, the ugly of lower interest rates. It was a circus, outbid after outbid after outbid. So many potential home buyers dropped out of the game because they were simply exhausted and frustrated with putting in 20 offers or more to no avail. So what are you to do if you're on the fence of buying in today's market when rates are not at that sweet spot? Now, one option is to buy now and refinance when rates do go down. I'm sure you heard of the phrase, marry the home and date the rate. The benefit of this is you get the home you want without mass competition. Now, a factor to consider is that more lenders do have rate buy-down programs like the 2-1 rate buy-down or the 3-2-1 rate buy-down, and you can even use seller concessions to help with rate buy-downs. That is, if the seller is offering concession. It would be ideal if mortgage rates dropped during your temporary buy-down terms and you refinance before ever paying the higher rate. This could put you in a great position if this happened, and it is a possibility. The second option would be just to wait it out and see what happens. There is a chance that interest rates will decrease, and when it does, make sure you're ready. At the end of the day, it all has to make sense for you and your bottom line. I really would love to know your thoughts about this. What is your tipping point or your sweet spot for interest rates? Is it 5.5% or is it 6%? Is it 4%? Let me know. Drop a comment below. And if you want to chat about buying or selling in the Phoenix area, click the link below to schedule a chat session. I'm Renee the Realtor. Thanks for tuning in, and we'll see you in the next video.